I mean, the damage is done. Biggest affordability hit in our lifetime. I mean, we are talking straight vertical pricing. Home prices went up straight vertical. There's no slowing down. And then once rate rise, boy, you just get, some payments are up 50, 60, 70%, for a year. That is meaningful, right? That is painful. And that was the worry. This is why I've always talked about, from 2020, as long as home prices didn't go above 23% in 5 years, we're okay. It got destroyed in 2 years. So when rates rose, what did everyone think was going to happen? But what happened in this period in 2020, you had home prices accelerate well above rent, right? The growth rate of pricing has always been rising faster than rent. But here you had both of them at the same time occurring, where you have had accelerated home price growth and accelerated rent. So there's kind of nowhere to hide, because home prices now, mortgage rates, the total cost of housing, when you talk about the mortgage payment, taxes, and insurance, just blew out, in the last 2.5 years. But also rent inflation blew out. When you look at rental vacancies and homeowner vacancies, everything has been falling down lower and lower. There's no relief anywhere. And that's why the concern, I know we talked about this in 2020. It was like, boy, I think the cities are about to get hit again. The demographics of America are too good to have like rental deflation. And guess what happened? Boy, shelter inflation just picked up. But home prices itself, just because of the total cost of housing, has deviated from rent inflation for a very long time, and it just got worse, right? So even as strong as we see rent inflation pick up, the total cost of housing just is broken away from rent as well, which makes it, again, harder for single renters to buy a house, which means a lot of these people need to get dual household incomes, or they move, right? You see a lot of people moving to cheaper areas, which makes sense. You can buy more in parts of the country that haven't had the kind of coastal home price growth. But those areas now have been hit as well. So they all say there's no country for old men. There's no country for low housing costs in America. We just got blown out of control on both the rental and home buying side.
Well, this is a very important point and something that relates to a post-COVID phenomenon where we see this work from home phenomenon where people can live essentially anywhere in the country they want, some significant percentage of the workforce. I, for example, am in New York City, but I wouldn't have to pay the stupid price that I pay to live in this one-bedroom apartment if I lived in Tulsa, Oklahoma, or somewhere else, and probably would do better from a state and local taxation perspective as well. Talk a little bit about that phenomenon and how it intersects with the thesis.
Even before COVID, even before work from home, I thought this period in time in history, more people would move, especially from coastal areas, just because, the same thing as always with me. People rent, they date, they mate, they get married, they have kids 3.5 years after marriage. You don't typically live in an apartment or a townhome or a condo. You want a bigger single family home. So people were going to move anyway. Then this unbelievable new phenomenon where you can actually go around the country, buy something bigger for yourself and your family, and work there for the company, because everybody traditionally buys or lives near where they work. You don't need to do that anymore. Unfortunately, that has brought unbelievable price inflation to these areas that have never seen it. Even when you look at Dallas, Fort Worth, Texas, I mean, that area just blew out of proportion. So the work from home exported inflation from certain states into areas that didn't have, kind of the proper supply to take that kind of migration, that kind of income power. So you see these areas growing 20, 30% as well. And this is not like the credit boom of 2002 to 2005. These are all legit home buyers. And it's just painful to watch how fast home prices grew and how unfortunate it is, because, if we just grew at 3 to 4% a year nationally, we would be okay. Wasn't the case. So the work from home is actually an inflationary premise. It's maybe a deflationary factor for those people that were ever to obtain a home at cheaper, but for everyone else, especially the local population, they get dinged for that outside money.
Yeah, the last time I was down in Texas, every third person I ran into down there looked at me and asked me disdainfully, "Are you from California?"
Yeah. That's the thing. California exports inflation. They don't get it. It's not like people from Boise are coming to California and buying these $2-3 million homes with cash, right? So California doesn't have to worry about that, but and everywhere else, you see the exporting of inflation from kind of these wealthy coastal states that they just have a lot of money. They have a lot of selling equity. So when they sell their homes, even a mortgage rates at 6% doesn't really impact them because they have so much of a down payment. So again, painful to watch. But the positive thing is that higher rates are starting to cool the market, which is what we needed.
Yeah, by the way, they tend to kind of like New Yorkers in Texas. I don't know why. People were thrilled when I said I was from New York.
Yeah, well, California and Texas hasn't got along for a long time. So
So let's talk a little bit about something that you mentioned and more of a broader macroeconomic, even cultural phenomenon. You talk about this progression that people go through, date, marry, mate. Do you see any signs that that's being interrupted because of problems with the housing market, or this sort of is the toothpaste tube getting squeezed in a different way?
well, millennials are the biggest home buyers in America just because of the raw size. So they kind of just work their household formation. This is why I've always talked about how years 2020 to 2024 are going to be much different than what we saw in the previous expansion. But again, it gets really hard to kind of get things going when you have home prices rising so much, rental inflation, and we need a lot of people just to be able to comfortably live in shelter to kind of progress with their lives. My fear is that the amount of home price growth that we've seen just in this 2.5 year period makes it difficult to just kind of live comfortably. And also the fact that, higher rates has a potential of keeping some supply off, not because people want to give up their 3% mortgage rate or 4% mortgage rate. It's just that people need bigger homes if you lived in a smaller home. And it gets problematic if you can't afford a house at 5.5 or 6%. So a lot of times, maybe you might have to sell to rent a bigger single family home. So there's dynamics, frustrating dynamics that we've seen in the last 2.5 years, just because housing inflation is the story, right? And it's a lot of it. You can see it. Inventory just broke to all-time lows, and everybody needs a house. So either you buy or you rent. So when you get it on both sides of the spectrum, it makes life a little bit less comfortable. And we need people to move, get bigger homes, have kids, live their lives a little bit more comfortably. And what we saw in the last 2.5 years, savagely unhealthy. Nobody wants to force bid on a home. Nobody wants the prices to escalate. That's why you see the consumers indexes for home buying at all-time lows. And it makes sense, right? People have to buy certain things. They don't have to be happy about it.
Logan, you mentioned millennials in that piece right there. And I'm curious, I, as a Gen Xer, love to torment my millennial colleagues and tell them that they're now the old guys and old gals on the block. Tell us, what are you seeing in Gen Z as Gen Z begins to move into the housing market?
Well, they're still relatively young. I think 2% of the housing market is Gen Z. And let me tell you, probably get a lot of help from mom and dad for that one. But in time, they will grow into their home buying age as well. The difference is, I think they're going to be a little bit longer or take a little bit longer to buy a house. But again, that's the frustration, is that so much home price growth happened already, right? So they're going to be in a much problematic state than what the millennials will, because the millennials started buying in 2013. So home prices had already had a crash here. So we were kind of working our household formation, and they were buying homes every year, and they're the biggest home buyers now. Gen Z doesn't have that. So it's too early for them to even really focus on that yet. But boy, unless you get another home price crash, which I don't see, like, what we saw in the housing bubble crash years, they are stuck with this sticky inflation. That's always the biggest fear. Housing gets stuck. And here comes Gen Z thinking, what the hell? What happened? Because the millennials are, we've got millennials in their 40s now, right? So they're kind of in that age group, and they're moving on, and they're eventually going to be the move-up buyers the second time around. But here, poor Gen Z, unless prices crash, they're stuck with this. And that's the frustrating part. We don't talk about that because they're still too young, but eventually they'll get there. And they're a massive group as well. And unfortunately, they have to deal with the price inflation that we are dealing with right now in the last 2.5 years.
Right. So still early, but sounds like an important story and one that's going to become increasingly on our radar in the years.
Yeah, they're going to be mad, right? So, people say, well, Gen Z mad. What does that mean? But I mean, once they get there, they're going to be, hey, what's up? The millennials had it good. The prices came down after crash and they were somewhat reasonable, not reasonable anymore, right? Prices have deviated. So, you're going to hear more frustration out of that group once they get into their early 30s.
Let's talk a little bit about pricing and how people think about it. We've covered it in past conversations. Generally speaking, individuals, families do not assess price based on purchase price. They look at it relative to monthly payments. How much can I afford? In a rising rate environment, give us a little bit of context, a little bit of color around that perception and how it may be likely to change.
I mean, the damage is done. Biggest affordability hit in our lifetime. I mean, we are talking straight vertical pricing. Home prices went up straight vertical. There's no slowing down. And then once rate rise, boy, you just get, some payments are up 50, 60, 70%, for a year. That is meaningful, right? That is painful. And that was the worry. This is why I've always talked about, from 2020, as long as home prices didn't go above 23% in 5 years, we're okay. It got destroyed in 2 years. So when rates rose, what did everyone think was going to happen, right? So you pay the price for not having enough inventory. And we did. So that monthly payment is a lot more expensive. Now, there are certain people that doesn't matter, right? I mean, we're going to end 2022 with between 5.7 to 5.9 million total home sales. That's new and existing homes combined. That's a lot of home purchasings if you look back in the last 5 or 6 years. But that's a certain group of household incomes that are fine. The marginal home buyer just got obliterated, right? And it's not, people just think it's the mortgage rate that did this. No, it's the home price growth and the mortgage rate. And in people, that's why people say, well, why do you want rates to rise? Something had to stop this, right? We can't live in a society that says, well, the builders aren't going to build unless mortgage rates are at 3%. Well, we can't have 3% mortgages if the year-over-year home price growth is running at 15 to 20%, right? The society issue is right here. One group is always going to get messed up if this is the way we're going to have to build homes. We have to keep rates low for the builders to build. Something has to break that, and it didn't happen. So we got hit. We paid the price for not having enough product out there. And the millennials could buy, the move-up buyers could buy, the cash buyers buy, investors, everybody came in. And guess what? It was just complete madness, frenzy, and it got really bad early in 2022. So thankfully, mortgage rates went up. Could you all imagine what would have happened still if mortgage rates were still at 3%? I mean, if Redfin and Realtor.com are still showing 15% home price growth now, with rates getting up above over 6%, imagine what it would have been if rates still stayed below 4%.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.